Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Thursday, November 2nd, 2023. We now have the 800-pound gorilla in the room out of the way. Apple earnings have been out, so now the market is free to do what it wants to do over the next, really, we don't have a lot. We just have the Fed meeting out of the way. We have all the big market-leading fangs. Apple's always the last of them to take it home. Most of them reported last week or the week before, or I should say all of the other ones. And so now the market can turn its focus on to whatever it wants. We're past those big distractions. So what I'm going to do is something a little bit different. It'll be a relatively quick video. I'm just going to loop back, do that was then, this is now, go back to the other day because we hit some pretty good technical levels, some targets, some potential bounce targets, and so I think that's it. I can sit here as I have for the last week or so and make the bullish case. 200-day moving averages tested and successfully defended, even if they were undercut in things like QQQ and Apple, which is even more bullish. When you undercut a key moving average or support level, then recover it, then you have a bear trap. You have shorts that pile in on a break of a support level or a key moving average, and then they realize they were wrong. They were like that ruh-roh Scooby-Doo moment where they then they start to cover, and that's what you got here. And let's dive into the charts, and I'll share my thoughts. My thoughts are that we've certainly run through what was, reasonably projected in the charts and the technicals. Again, there's a potential for a whole lot more. I've gone over, this key downtrend line in QQQ as well as Apple. But let me do this. I'm going to go back to the video that we just posted here on Halloween. That was a few nights ago. That was October 31st. Today's November 2nd. And we were right here. So what I'm going to do is just play 3 clips from that video. We're going to look at 3 things: the Nasdaq 100, the S&P 500, and the VIX. See where they were then, see where I figured they might go to, and where we're at today. And let me cue it in here. Hopefully this audio comes through. I'm trying something new here where I'm recording the audio. Again, this is from the video posted on the 31st. So let me go ahead and play it, and then we'll jump to the current charts and see what happens since then. I think the drift will continue to be higher, as I've maintained for the last couple of days, into and through the Fed meeting into sometimes Thursday. So but again, there's a lot of ifs there. So let's just say we rallied before then, hit some targets, we may pull back. But I think if we're rallying into Thursday and we get to some decent resistance levels and we're up, let's say right here, or even up here, somewhere higher, that would be a good place to book profits and maybe either go to cash and wait for Apple to report, see how it does, or, well, again, I'm getting 3-4 steps ahead of myself. Okay, so, all right, I just paused it there. Now I'm back live to today. All right, so that was, pretty much saying, there's a lot of moving parts, there always are. But, in that video, I stated I expected the drift to be higher into and through the Fed meeting into today. Yesterday, there was a shot to be made at a downtrend line, but that was, gosh, it was another time frame. But on this one, as you can see right here, 14,955. Said, look, probably go here. If we get there, then that's a great place to book profits. Again, if you did what I did and went long recently to game the bounce, and I didn't milk every penny of it, but I got enough of it, and hopefully some of you are in it or took it. But that's where I was looking at again before this big pre or post-Fed rally. Most of it's come post-Fed, which again amazes me. I just can't get, things that were, this wasn't a hard prediction. I'm not a what do they call it, a soothsayer, fortune teller. But we knew the Fed wasn't going to raise. There was nothing that I heard said in the meeting that was anything different. Raise, but we're going to keep vigilant and keep the door open to another hike if needed. That was what was expected. And then yet the market rallied as if, I don't know. So again, you got to sometimes get in front of those things. And, it's been a decent, but nothing big rally. And again, right to that upper, expected target about 14, that's 14,955. And that was then, let's look at now, pop it up, 14,955, almost to the button. We carried a hair higher. As I do this video, futures trade, you know, they're back. They open back up at 6 o'clock. Remember, on the weekday they only shut down from 5 to 6. Other than that, they trade 23 hours a day, Monday or Sunday evening through Friday evening, and so we're right on that level. And okay, so what's the takeaway? Well, number one, we're overbought. What I said then, I maintain now. I think it's a great chance if you didn't already book some profits. Can we still head up higher? Yeah, there's a lot of bullish developments recently, but they were this is the move coming off those bullish developments. And as I said then, I suspect it's a good time to not only either book profits or get back short, because I think it smells like this is that perfect trap. I can't promise it is this, but it looks like one of those bear market rallies have just a knack. I've traded enough of them. They just, when they really look and feel and taste bullish and the real deal, and it's safe for the bulls to get back in the water and the technicals are even looking good, that's often when they do the rug pull out of nowhere, and it causes a maximum amount of pain. In fact, the reason bear markets and stocks fall a lot faster than they rise is for that. You can't have everybody bearish, everybody short. High short interest means short sellers are going to cover. High put to call ratio means everybody's protected on the downside with buying a lot of puts. See, it's got to come from times where the masses are convinced that it's safe to get back in the water. I don't know if this is what that is, but I can tell you, I can think of no better time for it to be that kind of, hey, just as this rally looks like it's the real deal, Fed's done raising rates, at least for the time being, maybe permanently, and that's it. So anyway, that's where we're at. And so here's an uptrend line. I gave you some potential, I thought they would fade it today at the end before the close, and they didn't. But we can still see that happen tomorrow and in the coming days. And what you want to watch for, again, a lot of, very few bought here. This is where everyone wanted to buy in the last couple of days, this big spike up after the Fed meeting. And if they fade that, then I think it'll be lights out. So anyways, that was then. And bottom line is, hey, maybe not. Maybe we carry on up to the primary downtrend line. But I think this was and still is, and in real time, Qs are open in after hours. Futures open now. I think a good time to either book profits on long and or go into shorts, or if you think there's more upside, and there very well may be, I can make a really good bullish case right now, and I have recently. Set your stops and let it run. You may carry up to that downtrend line. If we get there without any pullback, let me just say this. If we get there on like this, in other words, if it happens tomorrow, or on a pop-up Monday with very little pullback or consolidation, I would put high odds on a good reversal off that, a tradable pullback, just like you had here the last time. Remember, we were bullish and long on this divergent low covering shorts, rallying up. That was my T3 on QQQ on the 60-minute chart. I'll get to that in a second. And that's where we hit. And you can see a lot of it came on that final leg up, and you were overbought. When you look at the RSI here, right here, we're even more overbought now than we were then. We're getting to nosebleed territory on the RSI. So the best case for the bulls would be to see a little consolidation or a pullback first, maybe all the way down here, and then power on up and have have a little more fuel in the tank, if you will, to take out the trend line. If it expends that much energy to get there, just to get there, it's probably not going to have enough to go on through and keep going. At best, it would be a breakout and then a back test or a failed break. Okay, so bottom line is 14,955 has been hit. That was pretty much the upper, target before Apple would report tonight, and they did, and that's where we're at. They took it right up to the end, and so we'll see where we go tomorrow. I'm suspecting down. Okay, next up in that video, I'm not going to do the whole video. Like I said, three things: QQQ or NQ, it's one and the same, Nasdaq 100, VIX, and SPY. And next up, I covered the VIX here. And so I'm going to play my analysis again from Thursday. All right, in 3, 2, 1, play. This, pull back. I don't know how far, and again, I'm don't get me wrong, I'm still cautiously bullish. At most back to here. I'm still maintaining these targets as of now. I'm just, currently not in the position, nor would I add to it right now, because I think, again, the market's going to drift higher for the next couple of days, and therefore the VIX should continue to drift lower. So I'll update that later. Okay, all right, and the video, well, I didn't then, but I did. Oops, accidentally hit pause. Okay, we're back on. I did point out this uptrend line is an objective level, a little lower. And then, but as in that video, had it coming down here and saying, absolutely, pull back to this is a great, that was, remember, this is where we first bought it. This trade has had that initial thrust up. I think it was 23%. We hit T1. Looked for a bounce in the market then and shorted the VIX and did both, long the equity markets up for a bounce trade, and it was a great time. And that's why I list multiple targets. And upon each initial tag of each target, remember, we entered right here, swung it up, book profits, or you had the opportunity in reverse there. Then the next leg took us up to T2 with a reaction, another hit of T2. So you had two opportunities to exit. Here we were still going down. I said, wouldn't get back in yet. We went a little lower, said, look, maybe we'll bounce here. There's a uptrend line and VIX futures, but this is where I had in the video going down. And again, it's simple. Look, if it was objective to buy here, look at it this way. This wasn't a random kind of out of thin air support zone. And it was identified before as we were falling to it right here to go long on. The fact that we hit it and had one of the biggest moves in the VIX all year, absolutely 100% helps to further validate that as a key support level, because we had not just a little reaction, we had a big reaction off there. And so we're back there again. So if that was an objective buy opportunity, if it was support then, it's even better support now. And again, that was then a few days ago, the 31st. And let's go to this is now. Let me grab a chart. Oh, I have to clear those annotations before I can load. And then that's a 60-minute. Look at that. Here we are, right where we bought it before. We went in before. I said you can buy it down into anywhere in this support zone, but not below. Wouldn't be adding below. I'd be more concerned about stopping out, and that holds true again. So, and here's the way I look at this too. The price action's bullish. The Fed's out of the way. Everyone's wanting to buy. As I mentioned, we didn't just have little 5, 15-minute, even 60-minute buy signals in bullish developments on the daily. I'm sorry, on the intraday charts. We had them on the daily. That was the primary reason for me going long last week and covering shorts. It was the 200-day moving averages on the daily chart. It was the key support levels, those purple lines I gave you, those support lines. And so, like I said, there's this pretty good bullish case. So you can't let this one get away from you. But the same thing holds true. A stop a little bit below if they want to punch it through. And to me, it's all about RR. So if you buy the VXX here, re-enter or make a new entry, you give yourself, let's just say, let me pull it down here. I'm measuring from where we're at now or where we closed today, 4%. You give yourself a 4% stop loss at 2080 and your potential. Not guaranteeing anything here, but if my fifth target's hit, you're going to have a 58% profit on that trade. So you're risking 4% to make 58%. You're talking, what is that? Way better than the 10, 12, 15 to 1 or somewhere in there, RR. It's phenomenal. I'll take that 99 times out of 100, even if it's the odds of it playing out are less than some other trades. Again, you could use a tighter stop, but with the volatility, they may try to punch this thing up. You don't want to give it too much room. But again, here we are. We closed. VIX, I guess it trades after hour. Yeah, it should. I don't know how liquid it is. So anyways, that's check number 2. Again, right to where, said it might go on Halloween. And now the last one was SPY, the S&P 500. Okay, here we are in the video. And I'm just going to play, about 30 or so seconds of this. And starting in 3, 2, 1, here's the video. There, pre-Apple, maybe even pre-Fed, that'd be another 3.5% rally. I think that'd be a very objective place to take profits. It'd also be, let's see if it's a measured target for the wedge. When you see a bullish falling wedge like this is, you take the widest part of the wedge, which I just did here, and you add that to where the wedge breaks out, and that gives you a measured target, and that comes in roughly there, really right here, about that, in between this 431 and that 438 or so right there. So that's let's just say a target zone that if we got there this week, I think that'd be a great, excellent place to book profits, you know, quick alongside trade, and maybe even get back in short. I will give you my thoughts. Okay. So you have a little triangle here. Again, that was just a few days ago. If we got there, would be an excellent place to book profits and or get back short. That was then, and that was a 60-minute chart. This is now, and there's that triangle right there. 431 was the bottom of it, up to the top of the measure chart. It's not even a big range. I mean, it's pretty precise. It's what is that to the top? 1% range on a move that we were long off the lows there. It's a 5.5% pop in the S&P. So bottom line is there's a little more upside at the measured target. You have more resistance levels ahead, but that's it. And so here we are, kind of at the minimum part of the bounce target zone on SPY. We're exactly to where the max pullback on VIX, VXX, and exactly right at or a hair above the max, upside bounce target laid out a few days ago in NQ. So that's it. There's not much more to add to that. That's it doesn't guarantee that we stop there. It's just that's where the charts and everything that is processed, here in my little head and looking at 1,000,001 charts and other things. Oh, and then we'll wrap it up with just covering Apple because we're waiting. Apple. To me, again, I've said it before, the Fed was a absolute non-event. The market seemed to think it was, but the Fed funds futures were pricing in about a 99% probability. I don't know if I've ever seen that of there would be no change, and we all knew what Powell would say, so there was zero surprises again. But yet it's over, and that was, and you see, remember at 2 p.m. on Wednesday, yesterday, the market, it didn't even move, and you usually don't see that on a 2 p.m. Fed announcement. It moved a little in his press conference, and once he was done flapping his jaw, I guess a lot of people were just waiting to make sure he didn't say anything that was market wasn't going to like, and then things took off. But here's Apple. This is, and like I was saying today, I thought they would step in because we hit that downtrend line. That's major resistance. That's the bear market or the primary, the near-term downtrend line, I should say, off the major highs back in July. We peaked in July. QQQ did it as well, and a lot of things. And so Apple went full circle. Remember, we had a buy signal here. I laid it out as actually one of the most bullish setups. The most bullish setup I've seen in Apple since the beginning of the year. Remember back in January, go back, those posts are on there. I was long and bullish the tech stocks, saying that I thought the FANGs, I called them back then, would outperform the Nasdaq, everything, outperform the S&P. That's where the best looking charts were. I listed two of those as my favorites, Apple and Amazon. And that was for many reasons, including but not limited to positive bullish divergences. A lot of these key stocks at support. Well, the bottom line is that was the best looking technical setup I've seen in a time. This is the second best I've seen. It's the best I've seen all year since the beginning of the year. Why? Same thing, positive divergences. We held my 166 key support like a champ right there. No sell signals yet. However, if it's a bear market rally, like I said, this is what traps the bears in. These are bear traps, these beautiful looking setups. And now look, maybe it is, maybe it isn't. Maybe we're going to new highs, or at least Apple's going to go to new high. Maybe not. I don't know. Right now, what I can tell you definitively is this is a major downtrend line. Apple ran into key resistance. And so therefore, that further added to the case to short. I didn't get that fade into the close I was looking for today, but it doesn't matter. We parked right on those resistance levels, those pretty much max near-term, what I called pre-Apple bounce targets, stating in that video that I expected the markets to drift higher into and through the Fed on Wednesday into sometime in Thursday. And sometime just happened to push the envelope right to the 4 p.m. mark. And again, we could rocket through here, but this to me is a very objective time to close out the last longs and or go short. You can always get back in if we break out and everything starts firming up. But and that was before the close, and then Apple reported, and then they did their conference call. So if you put on the post market, Nothing much. I'll zoom down to 60. You can see it here on the 60. There's the initial spike. Just never act on those initial earnings spikes. And it kind of settled in here. This is a 60-minute chart showing you that same exact downtrend line off the highs back in July right there. And so far, a perfect rejection. So that was an objective level to close an Apple long or short it, and so far rejected. The Qs are holding up somewhat well in the after hours despite Apple, and Apple could certainly recover this, but as of now, look, again, resistance is resistance until unless taken out. And so there we are. There's that line on Apple. And you can go through all the other things. I've done that in recent videos, or Magnificent 7, show you those levels. And nothing's changed for the same tune I've been singing for months now, until and unless on these market-leading fangs, these purple levels go. It is not an all-in aggressive moment. Apple 166 roughly, Microsoft 311.50, Alphabet right here said these should have been colored purple. It's where, pointed out as a long at the 200 the other day as one of my top picks, and they're nice bounce, gap fill today. So these levels have to go here. Let me just, I keep talking about it, I'll color it up purple. Really, you have a spike low now, you want to see that go, but you have the 200-day. If it gets back down here, it's going to be, remember, all the post-Fed rally will be faded, and there's a lot of people, I can almost assure you. Let's just look at a 5-minute chart, and we put on our volume at price histogram bars, and you can see, we'll go to a 15-minute chart. So you can see, leading up to the Fed, here's a lot of purchases. This is all post-Fed. A lot of buying in this range right here. And there's the big old gap right there. So the bull case, if it can get into the gap and backfill it, well, that's your next resistance, the top of the gap. But right now, we stopped cold at gap resistance today. So Apple, Alphabet, what else? I mean, you can go across all of them. A lot of these stocks, they bounced where they should have bounced, and they did. Amazon, right on that purple key uptrend line and the 200-day moving average. So these are what I'm still viewing as reflexive bounces that I traded, but I didn't position for trend trades. I'm not looking for new highs. I'm thinking they're just reflexive bounces off the 200 days and key support, and we're going to do that. And I'll tell you, if we fade all these pops recently, I think you'll see sentiment will just crumble. It'll be a knife through the heart of the bulls, because again, these are some of the best, most bullish divergence setups with divergences, pullbacks to the 200 days by far that I've seen since the beginning of the year. And that says a lot, because that was one of the strongest rallies in years. So the onus is on the bulls. And again, it may happen. But if it doesn't, to me, that is one of the most bearish things I will have seen in years. If all these key stocks that I just mentioned take out the recent lows and fail to capitalize on these textbook bullish setups, pullbacks to the 200s, big, double-digit corrections there, and so that's it. So I don't know when we'll know. It could be weeks, or it could be days, or it could be months. We go up and then we revisit those, and opens up my marginal new high scenario, which is still just an alternative scenario. But let me wrap it up here, get the video out to you guys. Hopefully, I guess I'll have to listen to it first and see if the recordings, I mean, you can access that video from the from a few days ago, the 31st. It's still on the site. And you can see down on the bottom where I covered those securities, or you can listen to the whole thing. It was the same thing over and over, just citing, reiterating the near-term bullish case, but the case that was just looking for a bounce, and that once Apple is out of the way, again, true supply and demand dynamics can come into play. This is just kind of noise. This is just oversold, Fed noise, Apple noise. And now, if there are truly a lot more buyers in the market right now than sellers, the market should continue to go up. If there are more sellers, in the lurking in the shadows, this rally is going to get faded. And then, if and when we break those purple lines, those key supports, my near-term targets, and these are only, again, near-term targets. My longer-term targets are quite a bit lower. All right, let me wrap it up here. See if the audio comes out, and if so, I'll get it out to you shortly. This has been Randy Finney with The Right Side of the Chart. Have a great day.